All right, ladies and gentlemen, thank you all for being here for another live webinar with us from Phillip Nova. This is your facilitator of the day. My name is Sri. Today, we're going to be discussing navigating global markets, the short, the mid, and long term opportunities uncovered. All right, so as we know, the global markets, financial markets, they are constantly evolving, right? They're shaped by economic cycles, policy shifts, and investor sentiment as well. As a financial hub, Singapore provides access to a wide range of global investment opportunities through the SGX, allowing traders to tap into equities, indices, and derivatives across key international markets. In this webinar, we will uncover the short, mid, and long term opportunities present in today's landscape, and you can learn how to analyze market trends across different asset classes, stocks, indices, and futures, and discover a systematic approach to identifying profitable trades. We'll explore the balance between fundamental and technical analysis and let the markets reveal where the money is flowing. So, whether you're a short term trader looking to capture momentum, or a swing trader capitalizing on mid term trends, or long term investors seeking growth, this session will equip you with the insights needed to navigate global markets with confidence. The key topics we're going to touch on today: we're going to touch on the short, mid, and long term trading strategies for the global markets, stocks and indices, identifying the right asset for your strategy, fundamental versus technical analysis, understanding cause versus effect, tracking money flows across 10 major global indices, including SGX futures, and a step-by-step approach to making informed trading decisions. Okay, so join us, and as all of you have, thank you for turning up today. Let me just briefly touch on our speaker. He's none other than Tom Yuan, professional trader. He's also an SGX trainer. I don't go too much into details. I believe Tom has a very exciting introduction for you guys, so I'll let him. I'll let him tell you a little bit more about his past and his experience. Tom, before I hand the time over to you, I'm just going to quickly ask the audience. Audience, if you can hear me loud and clear, can you go to the question box and type yes in there? Just to ensure that everything is fine with the audio. Okay, go to your control panel. You should see question box somewhere on the top or at the bottom. Click on it and type yes in the question box. This will also be the same box that you head to submit your questions at any point in time that you have during the webinar. All right, thank you so much, Manish. Kietsua, thanks for confirming that you can hear us. Okay, Tom, without further ado, over to you.
All right, thank you, organizer. Thank you, and thank you for responding. I do have audience, I believe, not only from Singapore but also from our neighboring country. At the same time, I would also like to do a mic test because I'm using my computer as my microphone, so I'm speaking to the computer mic. If you can hear me loud and clear, do type a 3 in the comment. In the same question box, type a 3 so that I know that you also hear me. As I mentioned, I'm speaking to my computer microphone, so therefore, if at times along the way I get too excited, I do not see any 3 coming in. Okay, it's a bit delayed, so I see okay, now I see a couple of 3s. All right, Ken, which means that whoever, unfortunately, if you cannot hear me, then it's not my problem already, because since a number of people can hear me. Now, do one request. At times, when I speak too excited, I may get louder, so you have to control the volume on your side in order not to let my voice hurt your eardrums. All right? Okay, Ken, thank you for the response. Just a bit of further introduction. This topic is something which I did for Phillip Nova in April. And it's a physical seminar, and it's 2 hours. After which, it is actually very well received, and Phillip Nova requested that I do one webinar similar webinar so they can reach out to more people, especially to overseas audience as well. So therefore, I think there's a bit of miscommunication because the initial session was 2 hours worth of content, but along the way, I think they wanted it shorter because usually for webinar people, attention span will not be that long, and I requested 1.5 hours. Maybe they advertise it as 1 hour. I do not know. All right. Now, anyway, I will try to continue it within 1.5 hours, but I might drag it beyond 1 hour today. Yeah. So, well, you are at home. If you find that it's still interesting, you might want to stay to the end. But otherwise, I will try to finish it within 1.5 hours. Do acknowledge that by typing a one in the comment as well as I go ahead. All right, so this is the write-up of me and what I intend to cover in this session, which briefly has been summarized by organizer just now. So I will start by introducing a little bit about myself again, who I am. Not so much of a repetition. It is important because I come from the floor. From the floor, once upon a time, it is called CIMAX, all right, SGX, open up cry. And many people do not understand, thinking that it is an employment or servicing customers. Yeah. Now I do not make any I don't have any pay. I don't service customer to earn any commission. So I use my own savings. I go to the floor. If I make money, that is my income. If I do not make money, then my account goes down. So basically, that is what I do since 1992. Now, the proof that it has been so long is because of this so-called still shot of a video clip, a program Money Mind that featured me in a way. So basically, that is me in the center. Although you might think that it doesn't look like me anymore because that is in 1994, right? The proof that it has been that long ago is because that guy is standing next to me. Now, if you guys are actually aware and informed, you should recognize that this fellow is by the name of Nick Listen. So I'm showing him, yeah, for two reasons. Okay. Now I went into the floor in 1992. He went in 93. He became very famous in the pit in 1994, and he became famous in the world in 1995 due to bearing crisis. Right now, I'm showing this event for two main reasons. Number one is to show you how long I've been a floor trader, and number two, I'm showing this not to put him down, but instead to let you know that he is indeed a very, very good trader. He knows about trading. That is a very important mind game, psychological game, right? He is very good at manipulating the opponent's mind. Trust me when I share this with you, being a pit in the same pit trading as him, yeah. But unfortunately, along the way, he overdid it and it got backfired such that he brought down the whole bearing crisis. So with this simple story, I will go on to my next important slide, which is called the disclaimer, that all the events that you attend for trading, especially SGX event, you will see this. The authority is trying to warn you with two words called high risk, and I shall complement with another two words called high return. Basically, if you wish to walk this path, if you don't already walk it, right, to continue walking this path, you need to balance these two very, very well. Now, if you focus too much on risk, then you will miss opportunity because you'll be too fearful, right? But if you focus too much on return and you ignore risk, that is even more dangerous. That is when not only individual but institution, just like the bearing crisis, is due to someone ignoring risk. Yeah. All right. So therefore, if you ask me, so is it high risk or is it high return? My answer is it depends on you. All right. Along the way, you must always balance very well the risk and return at the same time for every step that you take for the rest of your life, as long as you remain a trader. Okay. All right. So other than who I am, I want to talk about our relationship. Yeah, because I know you're listening to me as a speaker. Many people sometimes mistook me as the exchange personnel or the Phillip Nova broker. But do let me share this model that once upon a time in Singapore, we have this entity called SES, stands for Stock Exchange of Singapore, that deal with stock and shares trading. And we have this place called Cymex, right, which is open outcry, very jacket, with fan signal, shouting, 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 where I used to trade and work. So basically, somewhere towards the end of the 90s, they merged into one single entity called the SGX, which you guys are familiar today, right? Now, however, within SGX, there's still two different departments called the ST and the DT department. ST stands for securities trading, still dealing with stock and shares primarily, and DT stands for derivatives trading, that basically continue what they used to do from the floor, futures trading. But of course, today they have a lot more derivative instrument, which is all under either derivative or some of the derivative instrument actually go into the ST side. Okay, now these are all exchange traded products, which is regulated. So if you are willing to trade or you wish to trade the exchange product, there's no direct access and you have to open an account with a licensed broker. So the licensed broker would either be licensed with the ST license or with a DT license or with both. In the case of Phillip Nova, they hold the license to both. Therefore, you are able to open a Phillip Nova account and can access to trading stock and shares at the same time trading the derivative instruments. All right. Now, so who am I? Some people along the way feel that I'm the exchange. Some people feel that I'm the broker, but no, I am on the same side as you. I'm also an individual trader, which I need to open an account with a licensed broker and trade the exchange product. So somewhere in 2008, after the floor closed, the exchange approached me to say, Tom, can you help me do some education since there's no more physical floor now and people have got nowhere to learn from experienced and professional trader, right? I agreed to do trading for them, ordered training from them, and since 2009, that is what I've been doing for the last, wow, 2009, now is a good 16 years, all right? Okay, so therefore, what I share with you is purely from the perspective of a trader, yeah, not to make you churn volume so that I earn your commission or your clearing fee, etc., etc. All right, so with that introduction, I will go on to making some terminology alignment. All right, terminology alignment. Basically, what I do is trading index futures with technical analysis. But most people are not aware of this, and most people, men on the street, typically are more familiar with investing stock and shares using fundamental. Okay, if you are not, then you are different, lah. But after doing education for 16 years, I realized these major discrepancy or rather differences when I start to talk and people listen from the point of view of investing stocks using fundamental so that they cannot truly appreciate what I'm talking about. So therefore, I will need to spend a couple of minutes or rather 10 minutes to explain the difference between these two. All right. So line by line, first of all, difference between investing and trading, there are two main differences. Number one, long-term versus short-term. Obviously, investing is doing long-term, whereas trading, I am doing short-term. If you ask me how short is short, some people can be holding a few weeks to a few days, but many traders hold within the day itself that we call intraday trading. They do not want to carry overnight, so that is how short it can be. Okay. Now, as compared to investing, whereby you hold for a long, long time, for a few years, or like Warren Buffett, hold forever and never sell it away. So, other than this first difference, the second difference is, of course, investing typically is single direction. People would like to only buy, okay, hopefully it will go up and make money and sell it off. And then typically the investor thought would be up is good, down is bad. Whenever people say, oh, today's market is good, means it goes up. And today's market is very bad, means it goes down. Whereas for a trader, we do not talk like that because we are able to do both directions. If the market is bullish, we will do something that is called going long, meaning that we will buy first and we sell back later if we are correct about the direction. If the market is bearish, right, we will do something that is called going short, meaning that we would start to sell first. And if you're correct and the market comes off, we will buy back later at a cheaper price. Okay, so for a trader, whether up or down, it is also good if we get it right. But up or down can also be bad if we get the direction wrong. So that is a major difference between trading and investing, which I need to clarify. Okay, all right. Then we talk about the second part, stock and shares. Now, when I was newer, basically before I joined the floor in 1992, in 1990, I was a total newbie trying to understand the financial market. All right, I attended courses, of course, as well. So I attended some stock courses, right? And then I find that I do not like it. I'm not saying that stock and shares is no good, but basically I do not like it, right? You have to do stock analysis, you have to do top down, you have to understand sector rotation, you have to do all that kind of thing, yeah, and read financial statement, which I am no good. Now, since I'm still keen and interested to go into the financial market, how else can I do? What can I find that is easier? And very fortunate, I found the easier way, which is called the index. Now, for those of you who do not understand, without going too much into detail, stocks will be individual, which I call micro. Micro meaning that it depends on the company whether they're doing well or not. It will be reflected in the stock prices, right? Basically, if a company is doing well, you see that over the long run, the stock price, the share price will go up, and vice versa. Whereas if I do not like to go into the micro to understand the individual stock, the company direction, the sector they are doing, right, and read financial statements, etc., etc., I focus on doing the index. Now, what is the index? Every country will have an index. Basically, every country would choose what are the companies in that country that represent the country in a way, right? They put them together and apply a formula to get a number that is called the index. So you heard of the STI, you heard of the Hang Seng, the Dow Jones, all right, the Kospi, the Nikkei. So all these are the various countries' index. And indices are macro, meaning that I just need to know the general picture, right? Whether the whole country generally plus the economy, whether it's doing well, that the index will therefore go up or vice versa going down. So therefore, this is a shortcut to people who do not like stock selection, etc., like me, yeah, who is no good. Then you can focus on doing index. All right. Okay. The index basically is a number. So how do you trade a number? And that is where the derivatives come in. Yeah, there are different kind of derivatives. The most direct, most efficient derivatives obviously would be futures, and that is how we come in. Yeah, the futures come in. So therefore, a long time ago, there are people talking about futures, which is agricultural product and other things. Now, the futures model is so good such that it has been applied to all other asset classes, like you have energy futures, you have currency futures, you have etc., etc., etc. But my forte is actually stock index futures. Okay, stock index futures. So tonight I will not be covering the topic on futures, but again, to share with you one main difference between futures trading and stock is futures itself involve margin. Margin implies leverage. All right, meaning that your profit and loss would be magnified, meaning that if you are good, your profits can be magnified with a smaller margin. On the other hand, if you're no good, your losses can also be magnified. And therefore, people without understanding this, they touch futures and they're no good and they lose a lot of money very quickly. And the conclusion is not that they're no good. The conclusion is future is dangerous. Yeah. So therefore, what I want to make sure you understand is not so much of whether futures is dangerous or not dangerous, but it is a tool whereby it is good if you are good. It is no good if you are no good. I hope this definition is clear enough. Okay. So on your own, if you do not know about futures, you might have to find out more about this subsequently. But for those of you already know, now SGX is actually together with Nova doing some promotion on the Asia indices. All right, so that if you trade now till end of year, I think you get a very much so-called reduced commission. All right. Okay, the next one, fundamental versus technical. Yeah. Now, as I mentioned, since I do not like the stocks, the reading of financial statement or so, when you go to the technical, meaning that you look at chart, the various advantages is you don't have to follow news, right? You don't have to follow policies, yeah? You don't have to have any financial background. And basically, all you need to do is to eventually understand how the market behaves, which I call market structure. If you don't know what it is, don't worry. Later on, I will explain to you based on what I understand about market structure to make you at least have a preliminary understanding of how the market behaves. And finally, one very important thing is called timing. With all honesty, now, if you do not agree with me on this, we do not need to argue, but if you think that whether investing or trading, do you think timing is important? If you think timing is important, let me tell you that I don't think you can get timing from fundamental analysis, but you are able to get timing from technical analysis. So if you do not know TA and you think timing is important, you owe it to yourself, yeah, to explore more and find out more about technical analysis. All right. Okay. So with that alignment, basically you will know that there is a basic mindset differences between investing in stocks doing fundamental versus trading index futures using technical analysis. So on the right side, this is what I have been doing for since 1992, and this is what I've been helped SGX do training since 2009. Okay, so my sharing tonight will be very much based on this right side. trading index futures using technical analysis. Yeah. Okay, based on this topic that Nova asked me to do, short term, mid term, and long term. Now, short term, if you talk about intraday, intraday trading is a different ballgame altogether. So therefore, it's not easy to mix one seminar or webinar to talk about all this. So today, I will not be covering intraday trading. However, you want to talk about short, right? It can be overnight, yeah, hopefully a couple of days to a couple of weeks, and including, I would like to look at the market and make you understand a bit of long term. So those of you who are keen to do so-called a bit of semi-investing type, you can also benefit from tonight's session. All right. Okay. So with that intro as well as terminology alignment, now let's go into understanding market behavior, right? Okay, trading is basically a numbers game. In a very candid manner, I've been sharing with people ever since I become professional. By definition, now professional means I've gained enough experience as well as having earned consistent profit, right? To call myself a consistent or other professional trader, I tell people trading is simply a numbers game. Whatever excuses you use to talk all this jargon, all this academic jargon, at the end of the day, it's about number jumping, and you have to decide whether the direction is up or down. If you anticipate the direction correctly and you put on the trade, you will make money. And if you anticipate the direction wrongly, you put on the trade, then you will lose money. It is as simple as that, as pure as that, right? It's a numbers game. So basically, I teach people how to understand the market move, yeah, the market behavior. There is a certain so-called identifiable behavior, right, over the long run. So this is the model whereby after becoming an educator, yeah, after teaching so many things, I come up with this particular model, which very often I use it in seminar to very quickly make people understand. I call them emo lines, all right? Now, so let's make sure we get this properly. The reasons for market to move, right, is due to a balance or imbalance of supply and demand. I believe most of you can agree with this, yeah. Whether you have studied economics or not, you know basically when there's more demand, right, it can push prices up. When there's more supply, it will push the price down. So it's all about supply and demand, right? However, what determines this supply and demand is people would use news, yeah, reasons, policies, data release, all right, as reasons. These reasons, I call them excuses. The reason itself do not move the market. It's how people read the news, interpret it to be good or bad, and then take action, whether they buy and sell. Collectively, more buying, it will push the market up. More selling, it will push the market down. All right. So therefore, I reiterate again the importance of that. Okay, there's one more very important thing, a very interesting thing is what is the underlying cause that is very, very strong. Now, beyond the forces of the economic forces of supply and demand, actually to me, there's another more important, more powerful force called the human emotions of greed and fear. Okay, greed and fear. So basically, how does the market behave generally, right? Because it alternates in two modes, yeah? It alternates in two modes. And this is important because you realize that the market doesn't go one direction up all the way or one direction down all the way, yeah? It will either trend, and after a while, when the supply and demand start to balance itself, it will go into non-trend. It will go into a sideways mode, okay? Now, after going into sideways, it will not go sideways forever, and it will continue into a trending mode. So to decide whether to trend up or to trend down. So remember this. This is very important because the market will, after trending for a while, will need to go sideways or reverses itself, and vice versa. Okay, I repeat this because this is important. All right. Now, so we look at the chart. Yeah, I always use the extreme example of the 2007 bull market leading to the 2008 crash. This is a classic movement whereby you will see how the market move after moving for a long enough period. It cannot continue in a straight line. It will have to either reverse or it has to go into a sideway. Now, this sideway could either be a big sideway or a smaller sideway. All right. So you can see that this reversal lets the market go into a big sideway trend. After this sideway, yeah, it will either have to continue to take higher or it will have to take lower, right? After which it narrow itself into a smaller sideway before it breaks the lower side and start to trend down. And as I mentioned, the market will not trend forever. After reaching a place, it will start to revert itself into a sideways again. Okay. All right. So with that, you might start to say, hey, Tom, that is hindsight, huh? How do you tell? How can I tell, right? Now, you can tell from something which I call emo lines, yeah? Now, emo lines, so what are emo lines? Emo lines would be 17 moving averages whereby I plunge into the chart to give me that effect. The effect like a fan like that, opening and squeezing. Are you able to see them opening and squeezing? I hope you can, because in 2008, before I start to teach this model, I actually practice them, I rehearse them, and I ask a group of friends' children, right? My friends' kids, I gather them and explain this to a group of children. They are all primary school going children from P1 to P6. That means 7 years old to 12 years old. And they all understand perfectly when I explain to them this opening and squeezing. So if you cannot understand, I'm pretty sure it is not my problem, but it is because of, well, you cannot even match the eye of a primary school kid. So allow me to just all right, use that kind of disclaimer. Okay, so can you see that from here, squeeze, and then the emo lines open like a fan, bigger and bigger and bigger, right? So as it goes bigger, you find that it cannot open forever, and it will start to squeeze, right? It will start to squeeze, it will open, it start to squeeze, it will open, it will start to squeeze. Okay, at the same time, I will still be asking for feedback. If you think you can see this opening and squeezing, please type a 1 in the comment for me, yeah, as you listen. All right, so therefore, you got to know that if you cannot tell whether the market is trending or not, you see if the emo lines are opening, that means it is in a trending mode now. All right, and if you see that the emo lines are in the process of squeezing, then they are in a non-trend mode now. So basically, just looking at the emo lines squeezing and opening and squeezing opening, it will suggest to you the alternating of trend to non-trend, trend to non-trend, trend to non-trend, non-trend to trend. All right. Okay. Thank you for the feedback. I've only one feedback. The rest of you cannot see. Only one person can see. All right. Fine. No problem. Okay. So now, this is the next part that is very interesting, right? Because I'm going to bring in psychology, whether you think the mindset is important or not. I call it behavioral finance, right? So when is a behavior considered normal, and when can a behavior go wrong? Yeah. All right. I remember when I was new, after attending some of the courses, learning about trading, I remember many speakers always say, to be a trader or investor, you must learn how to trade without emotion. All right. Basically, I'm a person who is very interested in psychology. Yeah. In my study days, I was subject in psychology. Okay, I'm very keen with that. I hear them saying that basically I find that something fundamentally is wrong, because they say that you should not have emotion, because I know that we are all emotional beings. We have emotion. Only one kind of people have got no emotion, that is called dead people. All right. So therefore, to me, emotion is perfectly okay. There's nothing wrong about it. The only important thing is emotion must be moderated. Yeah, moderated emotions are okay. Extreme emotions are not okay. Now let me give you a normal real life example. One emotion that we are very familiar is called anger, correct? I'm sure you yourself, okay, or someone in your family, close friend, colleague, or whatever, you have some angry people. Yeah. Now these people, anger itself, is it okay? Again, as I mentioned, emotion is perfectly okay if it is moderated. When someone is angry, it is trying to let you know that I'm not happy with something. Yeah. You have to change it. All right. So that is okay. It's a form of communication. However, if anger go to extreme, where people shout, you throw tantrum, you shout and you scream and you start to become violent, that is when it is not okay. All right. Now, if you guys can understand what I mean, please type a 2 to acknowledge it, meaning that any emotion is okay as long as it is moderated. It is not okay when it becomes extreme. Type a 2 to acknowledge if you understand this. All right. So if you understand this, let's go on to the two very common emotions that we see in the financial market. It's none other than greed and fear. All right. Greed is absolutely important, because greed will provide you with the motivation. Without greed, you're not motivated. You won't even attend my seminar or webinar, right? Fear is also important, because fear is the part that will give you your caution, right? So if you balance your greed and fear, that is when you can balance your risk and reward. Yeah. However, if you go into extreme greed, that is when you call euphoria. That is when it is not okay. I believe I don't need to elaborate that. If you go into extreme fear, then that would be extreme fear. That would be called panic, and you also know that it will be not okay. All right. So therefore, this is individual. Now, so you have to remember this to reflect on your own, to remain moderately greedy and moderately fearful and not go into euphoria or panic. Okay, we can control ourselves, but we cannot control the market. The market collectively, the people would naturally go into the cycle of moderate greed and occasionally go into extreme greed, euphoria, and moderate fear, and occasionally go into extreme fear, into panic. So how do we want to identify these four emotions in the market? All right, just now I already showed you the emo lines, so we can see that if the emo lines squeeze, from here is squeeze to open on the upside. Okay, this is what I mean by squeeze and open on the upside. If you can identify this squeeze open on the upside, please type a 3 in the comment for me. Okay, so when you see this, right, the market is shouting out to me that, hey, I'm getting greedy. That is the message that the market is trying to tell me. All right. Now, however, if the emo lines are squeezed and start to open towards the downside, yeah, again, if you can see this, type a 3 for me. This is equivalent to the market trying to shout that, hey, I am fearful. So this is a simple message from the market. I am greedy or I'm fearful, from squeeze to open up or squeeze to open downside. Okay, so pretty simple. Now, if the market has trend for a while already, if you did not do anything and you look at the chart and you find that the emo lines open very wide, which means that you have already missed the entire move. Okay, that means you have not participated. Now, let me tell you what happened when the emo lines are wide and price is on top. This is no longer normal greed already. This is when the market would very likely start to go into extreme greed that I call euphoria. Okay, so I repeat, euphoria is when the emo lines are wide and the price is on top. That is called euphoria. On the other hand, when the emo lines are wide, yeah, in fear, and the price is below, that is in the face of panic. So if you can identify what is euphoria and what is panic, type a 4 in the comment. Okay, type a 4 in the comment. All right, so if you can get that, now let's quickly look at the corresponding action. So as I say, moderate emotion is correct, right? If you see the market behaving normally, moderate greed or moderate fear, this is where I want to follow them. When I see market showing me greed, I want to long. If I see the market showing me fear, I want to short. However, if the market go into euphoria, that is when the SOP is, hey, it's too late to buy already, right? On the other hand, if the market is showing me, hey, panic, then the SOP for me is, hey, now is too late to sell already. Okay, now just listen, just remember the SOP first. I will go a bit more into detail later on. So therefore, the summary of the four emotions, including all the points that I've said so far about market structure, is summarized in this particular chart itself. Yeah. Now, a little bit more thing that I want to share about this one. Greed basically does not guarantee a start of trend, but the uptrend will always start with greed. Similarly, conversely, a fear does not guarantee a start of downtrend, but a downtrend would always start with fear. Okay, this is something that you do your own backtest, you can see that it is indeed true. Yeah. Now, however, of euphoria and panic, it's a bit more complicated because as the market go into euphoric or panic mode, that is when emotions are high, right? Emotions are high. So basically, when emotions are high, what happened? What happened? Now, this is something whereby being someone interested in psychology, right? I start to understand this relationship between emotion and common sense. All right, it's very interesting. This particular term, when I was young, I have the adults like to scold children, right? Either their son or whoever. Use your common sense, yeah. But the fact that no one ever taught us how to use common sense. Do you realize that? Now, today here, I I start to teach you that there is a inverse relationship between emotion and common sense. This is a simple mathematical formula, meaning that if the left side is high, this bottom denomination is low, and vice versa. Meaning that if you want to activate your common sense, you want the common sense to be high, your emotion must be low. If your emotion is high, then your common sense would be low. All right, this is the meaning of this mathematical formula. If you understand, type a 5 in the comment. Okay, type a 5 in the comment to indicate that you understand. So therefore, a lot of times we do have the correct answer inside us. It's just that our emotion is simply too high such that this common sense cannot surface. So if you want the correct answer to appear in front of you, make sure you always maintain your emotion low. All right, and that explains why a lot of people, they do meditation, yeah, they do zen, do breathing or whatever, just to keep their emotions low so that they can activate their common sense to the highest level. So therefore, remember, emotion high, common sense low, and emotional common sense low. Both the market during euphoria and panic stage is when collectively the market is displaying emotion high. Therefore, collectively, many players in the market would be making mistake. You can benefit from people's mistake if you maintain common sense low during such juncture. All right. So the total summary of what I've said, including euphoric SOP, will be all here on this chart. All right. So okay, until this point, whoever asked me, I glanced at the comment. There is one question: what is K in the behavioral finance? K is a constant. It's a mathematical formula. Just that A equals to K over B. That K is a constant. All right. So simply, you don't have to care about K. Simply, when common sense high, emotion high, common sense low. You want common sense to be high, make sure emotion is low. You just need to remember that. Okay. All right. Until this point in time, those who do not understand what are those moving averages, what are those emo lines, they are EMA, exponential moving average with such parameter. So if you have charting ability to actually call up 17 EMAs starting from parameter 6, 9, 12, 15, yeah, all the way until 51 and 55, you'll be able to get the immobilized effect just like what I've shown you, and you're able to identify the 4 emotions in the market, whichever market that you are trading. All right. Okay, so a very quick wrap up of this market structure part. What have I been trying to make you understand? Yeah, that market is a numbers game, so you need to understand how the market behave generally. Point 2, how does the market behave generally? It will toggle between 2 modes. Okay, whether it is trending, it will not trend forever, and then it will transit into sideways. It will not go sideways forever, and it will transit back into trending. So if you're able to identify the correct mode, you would very likely be profitable. But if you identify the mode wrongly, then very likely you would suffer some hiccups. Okay. All right. So how do you tell whether it is trending or sideways? You use immobilize to see whether it is opening or squeezing. Okay. And this corresponds to the 4 emotions whereby I have greed, fear, euphoria, and panic, and the corresponding 4 SOPs. Yeah. Whether is it too long, too short, too late to buy, or too late to sell. Now, the characteristics of each behavior have already summarized for you. And can you benefit if you understand this? Well, I don't have an answer for you. If you think can, that means can. If you think cannot, that means cannot. All right. Okay. So now another thing because I see some questions start to come in, I will not be able to address the questions now. So I need to continue delivering until towards the end. We will try to devote some time to Q&A. After which, if you still remember your question, you might want to ask me again. Okay. All right. So to wrap up again with my emo lies, you have probably heard of this quote by Esikoda called "The trend is your friend, except at the end when it bends," right? So now you know very well already. The trend is your friend. When you see greed, when you see fear, it is your friend. Follow the trend. But when you see euphoria and when you see panic, that is likely when it is nearing the end, when it is about to end. Yeah. So with the understanding of the market structure, I believe this quote would make a lot more sense to you now. The trend is your friend, except at the end when it ends. All right. Okay. In the past, or in some of the seminars in the past, I used to basically stop there, yeah. And then many people, they like it, they understand it, but they find it a bit missing somehow. So later on, some of these people attended my courses, they learned more already. They actually said that to me that maybe right in the seminar, if you can cover a bit more, just a bit more, it will be beneficial. So because of that, right, I include this part. Just now when I say, hey, euphoria too late to buy, right? Panic too late to sell. Some people say, hey, why don't you say euphoria sell, panic buy? Cannot. Is very different. Now I repeat, when I say euphoria too late to buy versus euphoria sell, can you tell that there's a difference? If you can, type a 6 for me. If you cannot, never mind. All right. But those who can, you type a 6 for me. Yeah. Now, When I say euphoria, too late to buy, it does not mean that you go and anyhow sell, because when market euphoria, people are still buying. The trend is still up. It's just that this upside can stop and turn anytime. So therefore, I say too late to buy, but I did not say sell. Okay. Now I'm going to share with you next. How do you sell? How do you, during euphoria, you can attempt to sell? That means the market is telling me, hey, sell signal is appearing, and vice versa during panic. How do I let the market tell me that, hey, indeed, the market is actually, buyers are coming in already? That is when I will introduce this topic called gap. Okay, now very quickly, gap. So you see, this is how normal people define gap. That means they use the high and the low of consecutive candles, yeah, to see if there's no overlap, then there is a gap. You can see that over here, there is an overlapping. So there's no gap until this part and this part, the high and the low, there is a gap, all right? This is how the usual textbook or most people define gap, but I do not use high and low. I use body, which means that for a candlestick body, as long as two consecutive candle body are separated from each other with a gap, to me, these are called gap. And these are called bullish gap because the subsequent candle float above the body of the previous candle. So these are bullish gaps, all right? And then similarly, when the market is bearish, the new candle will have the body floating below the body of the previous candle. So these are called bearish gap. Bullish gap versus bearish gap. Again, just to give me some feedback, if you can understand using body to differentiate bullish gap and bearish gap, type 7 in the comment. All right. Okay, so now gaps, yeah. You can see that I say, hey, euphoria, too late to buy, right? Panic, too late to sell. So what do? I want to, during too late to buy, look for potential exhaustion on top. How do I look at exhaustion? That is when I identify to see if there's any bearish gap appearing during euphoria. That means now this gap thing is a lot more complex than what I can deliver to you. But I just pick up one place for you to learn how to identify gap. If you learn how to identify this and practice this, right, you find that it is a very good tool. Now, so when the market is going up like that, right, at a certain high point, obviously after going up so much, it would have been euphoric already, right? So during euphoria, if you identify a bearish reversal gap at the top here, it is equivalent to a sell signal. Okay. Now, similarly, when the market goes down, yeah, down, and down quite a bit already, you have the immobilize open very wide in panic mode. Then, if you see a bullish gap appearing, it is equivalent to a buy signal. So over here, look for bearish gap. Over here, look for bullish gap, and it is very, very reliable. Now, things are never 100%, but if you can find things that is very reliable in terms of probability, you will be able to make yourself a profitable trader already. Okay, now let's show example. Can you see over this part? Market is up. I want to identify a bearish reversal gap. Are you able to find a bearish reversal gap? Meaning that you have two candle body floating, that is two candle body floating away from each other, and it is a bearish gap. I give you 3 seconds to identify over here at the top. 1, 2, 3, Z. If you manage to identify this, type a 1 in the comments for me, that if you currently identify this, all right? That is the body on this day is here. The next day, the body is floating below with a gap, and that is equivalent to a sell signal appearing here. If you can identify that, type a 1 for me. Now, I want you to try to identify a bullish buy signal when the market is coming down. Down. Obviously, market has gone into a panic mode, right? So in a panic mode, how do I identify a buy signal? I want to look for two consecutive candle body that is floating away from each other in a bullish manner. All right. Again, I give you 3 seconds to identify. Can you see a bullish gap over here to teach us how to identify a bottom here? I give you 3 seconds. 1, 2, 3. Are you able to identify this one? I'll remove it again. This candle body and this candle body float away from each other, and this is called a bullish gap. That in a down market, this is equivalent to a buy signal. If you can identify this, type a 2 for me. Wow, so far I have no response for typing identification of gaps. That is quite sad. All right. So this is equivalent. This is equivalent to a euphoria, right? Too late to buy, and I see a sell signal. This is equivalent to market going into panic, too late to sell, then I see a buy signal. Okay, all right. Let me just quickly show you some examples. Yeah, during the COVID, that's not long ago. The COVID plunge is in 2020, 5 years ago. So can you also see that while things are so uncertain, wow, the first time ever, we never experienced this before for a pandemic, right? That caused the whole world to lock down. Yeah, the Dow Jones, S&P, and the Nasdaq, they are dropping. Can you see that? I have on the same day the appearance of a bullish gap in the Dow Jones, the S&P, and in the Nasdaq. All right. It continued with a second day of bullish gap, after which the gap becomes a support for the Dow Jones, for the S&P, for the Nasdaq. So for technical traders like ourselves, we will be taking instructions from the chart like this instead of trying to read the news and see how many countries go lockdown, how many companies close shop, and try to see how many people die. We do not care. Basically, all the news, right, that has been churned out has been factored into the market. At this point in time, it formed a base and is starting to turn around. Okay, now, so I will further show you the Nasdaq, after which from the COVID plunge, after that, it continued to go up with new bullish gap forming that created a trailing for me, right? All this become trailing gap. That market after that rose for 6 full months, a good 6 months before it start to give me a deeper retracement. All right, so that would be what I share with you, the power of identifying the reversal gap during euphoria and panic stage. Yeah, now for a short span of 1 to 2 hours webinar or seminar, I think I can only teach you one or two things that can be very powerful, although it's not many things. All right, this is to show you our STI chart, something that I updated over the weekend. Yeah, I got to prepare this over the weekend. So basically, you can also see whether you realize or not. Last year, August, there was a bit of panic selling, right? That caused a lot of Asian market to have a swing low. And after that panic selling in August, STI has a bullish reversal gap. Okay, same thing. Market go into panic, and I see a bullish gap to give me to indicate a buy signal. After that, just like what happened to the Nasdaq over here, the STI gave me bullish gap that trailed its way all the way up until it reaches 4,000. Yeah, at this high 4,000, I see a bearish gap appearing. This bearish gap appearing after this whole move gives me a warning, and this warning would have prevented anybody being caught with the Trump tariff that plunged all the way down like this. All right. Now, when Trump announced his tariff, yeah, and caused the whole market turmoil, after that, what happened to STI and also the rest of the market? We have a bullish gap for one day. It get down. We have a bullish gap happening on another day, giving me two buy signals over here before the STI stagger its way up to recover all the way until this level. That's last Friday. Okay. For yesterday and today, the market STI, or rather, is doing a bit of struggle over here. Yeah. So same thing. At this high level, do take note. If I see any bearish gap appearing, that would tell me, hey, be careful. It is euphoria, too late to buy. Sellers are appearing. If that happens. All right. So this is to show you what I've been showing you so far, including this topic on gap, telling you where to learn how to identify gap. So up to today, what is the market doing? Can. All right, so let me go to the next point by sharing two very important theories to you to understand trading, to understand how the market behave. These two simple theory, number one is called the greater fools theory, number two is called a Dow theory. Very quickly, greater fools theory is just to say that whoever try to participate in the stock market, whether you investor or trader, you are a fool, right? How can a fool make money? Yeah. Now imagine a fool buying a share at $5. How can he make money? He can make money if there's a greater fool willing to buy at $6, right? How can this fool make money buy at $6? Provided if there's a greater fool willing to buy at $7. Yeah. Now imagine this fool bought the share at $7 and waiting as money like a fool, and suddenly the news are so good, so he's so happy. Yeah, because of good news, right? My $7 share would surely go up, but instead the market turned around. Why? because there are no more fools left to buy. So beginners will always find that, hey, how come good news cannot go up? Good news cannot go up. Just now I already told you, news are simply excuses, yeah, for people to take action. If everybody has already bought, however good the news is, the market cannot go up anymore. And if the market cannot go up anymore, there's only one way it can go, that is down. So therefore, that is the essence of greater fools theory, right? No more fools left to buy, market cannot go up, it can only go down. No more fools left to sell, market will not go down anymore. No matter how bad the news is, it can only go up. Yeah, that is called greater fools theory. Whether you heard of this before, if you like it, if you agree with it, type a 3 in the comment for me. Type a 3 in the comment to internalize it. So the next time you will not at the market top look for good news, at the market bottom look for bad news. Okay, type a 3 to commit to this theory itself. All right, so you can see the Nasdaq, right? After going up, yeah, there must be reason and some excuses to make it come down because there are no more fools left. There must be some reason to make it come down, right? It go high enough already, no more fools left to buy. There must be some reason for it to come down. And same thing for Nasdaq, after going up, no more fools left to buy. There must be some reason, excuses for it to come down. Yeah, it's as simple as that. Don't attribute too much to news, but the greater fools theory itself is very interesting. Okay, the second thing is called Dow theory. Now, you can Google Dow theory. There are 6 important points, but this first point is what I like the most. How to identify trend? If you see a market doing higher high and higher low, according to Dow theory, it's telling you that this trend is up. If the market is doing lower high and lower low, it is telling you that this trend is down, right? Now, just now I also mentioned the market does not always trend. It could go sideways also, right? So if you go sideways, you see that the high and low approximately at the same level. That is when it is doing sideways. This is called Dow theory. But how do I use Dow theory? I use Dow theory with news, because there are always so-called good news and bad news, right? People always feel that, oh, good news market go up, bad news market go down. Yeah. Now, this is the amateur way of interpreting news. However, how do I interpret news? I want to interpret news in what way? Not so much as to think whether this news will cause the market to go up or down, but rather, is this news being perceived as good news by the general public or being perceived as bad news by the general public? So, if the market is good news, right, does the good news push the market to new high? If good news that can make market go new high, then the trend is up. Yeah. If the trend is down, good news would only cause it to go up, but it will not be able to take previous high. And once it finishes going up, right, it will turn around and any unfavorable news will cause the market to take new low. That is how I use Dow theory together with news. This is a very, very useful way to incorporate fundamental into the technicals I'm sharing with you today for free. I will elaborate too much. If you can get it, good. If you cannot, then hopefully you remember this, then later one day it will click. So if you agree with what I say and how to use this, you think it's useful, you type a 4 for me. All right, I just want to see if I've got someone who agree and probably benefited from it. Type a 4 to commit that next time you're going to use it this way. All right, so these are the 2 important theory. With that, now let me come to the next part. This is again, it is something new that I've only introduced since last seminar that I did for Nova, because SGX and Phillip Nova, after doing sessions for them for so many years, they have been giving me one feedback. Okay, now Tom, your session is good, very well received. Audience enjoy themselves, but it's like the how do we have more follow-up? Actually, I do have, I run courses, I think have attend my course lah. But the thing is that people, whatever reason not free to attend, not interested to attend, not willing to pay. At the same time, SGX and Phillip, attend course. I know you don't run course often or whatever. Can you have a bit more proactive follow-up? Okay lah, finally, right, since last session, I agree to have a simple follow-up, which I need to teach you how to do this so that when I do the follow-up, you are able to benefit from it. Yeah. Now, I call this listening to the market. Okay, that means we are not trying to look at the news and interpret it unless you are very good at interpreting and you're consistently correct with your interpretation. Even then, right, news keep coming out, correct? So again, I say I'm not good at fundamentals. Yeah. So therefore, I look at charts. I look at 10 markets. I look at 10 indices and I let the market tell me whether the general trend is bullish or the general trend is bearish, or which are the market that is bullish and which are the market that are bearish. I follow a simple step 1, 2, 3 SOP every weekend to do that. I'll share this with you so that you are able to do my weekend follow-up, which I would be sharing with you how I do it. All right. Now, so I have created this Facebook called Trading Wisdom. Very quickly, take your camera, go and snap a picture of this. After today's session, you can go to the Facebook and look for this Trading Wisdom. All right, it's a open to public Facebook. Yeah, you can try, you can like, you can follow, so that after the seminar, I can't promise you forever. I tell my audience, if whenever I do a seminar for you, whether with SGX or for Phillip, I would do a 2 months follow through. That means for the next 2 months, over the weekend, I would be posting this step 1, 2, 3 with my chart to share with you whether the general trend is bullish, bearish, or where the market is, or where the money is flowing into and flowing out of. All right. So it's called Trading Wisdom. Okay. So basically the 3 steps. Now, step 1 is very simple. Step 1, I would look at the latest 2 weekly candle. That means if today's the weekend, I want to look at this week that is over and the last week, right? That means I compare the 2 latest weekly candle to see whether are they doing higher high, higher low, all right? Are they doing lower high, lower low? Are they doing inside? That means is a lower high and yet higher low contained within the last week's candle. I call this inside. Or is it doing an engulfing? Engulfing means it pierced through the high and then it take the low, or it could be a bullish engulfing whereby it took the low and it take the high. Okay, so these are the 4 possible combinations. If you understand this rather well, you type a 5 in the comment for me. Yeah. Now I will compare the latest 2 weekly candle. So let's take a look. At the same time, I want you to take note of the colors. Red, green, red, blue, and purple. Right. So let's look at Simski. This is taken over the weekend. Now, over the weekend, whether you know or not, our market basically has been on the up, right? On the up for quite generally in a way until this point whereby the Trump tariff caused most of the market, to react, and after that we recovered all the way until the previous week. We have this candle, okay, and the latest week, that means the week after, it started by triggering the low and it triggered the high to close. Yeah. So this, what will it be? Would I call this higher high, higher low, lower high, lower low, inside, or engulfing? I give you 3 seconds to think about it. The market take the low and ended the week by taking the high. All right, your 3 seconds is up. So this is a bullish engulfing, correct? Which I use it in purple color. Now, so the step 1 for the Singapore market is to tell you that instead of showing weakness, it is still trying to push with some strength. Yeah. Now, but at this level, it is going into a bit euphoria already, correct? So look at another market, the Nasdaq. Nasdaq has also been on the up. Then same thing, there are actually some warning at this high level right now. I'm not going to candle reading on this thing, and then the market actually start to come off before Trump actually announced his tariff, right? And it caused this to plunge. Yeah. Now after that, the market, if you watch week by week, slowly all the way until here, for all the 4 weeks, all these 4 weeks, are you able to see rather clearly, compare 2 consecutive weeks, what has it been doing? I'll give you 3 seconds to take a look, especially the last 2 weeks, right? Are you able to see that it is doing higher high and higher low, higher high, higher low, and the last 2 weeks is also higher high, higher low. So it will be in green color, higher high, higher low. So this is step 1. Step 1, which I use over the weekend to analyze what is the general market doing. Okay. All right. So now we have step 2. Step 2 is when looking at the emo lines. Yeah. Now I'm not using the way which I explained the emo lines just now to you, but basically emo lines are moving averages and the 17 of them. So basically, another simple way to use the emo line is if the market close above all of them, then it should be considered generally bullish bias, right? If you close above, if you close below all of them, the closer, then it should be considered generally bearish, right? I believe this is easy to understand. And the market can be closing inside the immobilized. So either it would be closing above, inside, or below the immobilized. This is my step 2. Okay, now take a look at Simsky. Simsky above, go inside, close below, immediately go back above, inside, above, inside, above, inside, and then the Trump thing, of course, it closed below, go back inside and above, 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 all the way until the end of last week. Over here, does it close above, inside, or below? This is quite obvious, right? It is closing above. So my second point is it is above. Yeah. Now again, we take a look at Nasdaq. You also see that Nasdaq on the way up is above, inside, above, inside, above, above, inside, inside. It did not go below. Inside back to above, inside back to above. That is how the market would be in a way going up, right? Sometimes fighting at the top border of the immobilized. Yeah. Now after that, it stay inside, it goes below, and this is being triggered by the Trump tariffs, right? So if the Trump tariffs in fact were to lead to something very bad, most of the world market ought to either stay below or at best inside. Yeah. But what happened? Now you all know today, you call it hindsight or whatever. Trump essentially, it is his negotiation tactic, right? I used to I've my daughter, yeah, some young people, they're trying to understand the Trump's tactic in terms of financial market. Basically, I'm trying to tell them Trump is like a robber. Trying to rob you. This fella say, okay, I want to rob you $10,000. Wow, you panic, right? Then the fella say, no, not 10,000, 20,000, 50,000, 100,000. No, I'm going to rob you 1 million, 2 million. Then you got more and more panic. Suddenly the fella say, okay, never mind. I wrote you 10,000 only. Wow, good news, right? I find that it's so ridiculous, right? From the start, he's going to rob you 10,000. Yeah, at first you're not happy, but when he pushed the number until I will rob you 2 million, yeah, when you freaked out, and then later when you remember the number 2 million and you say, okay, now I'm going to rob you $10,000 a bit. Wow, that becomes the good news. So that is how the market reacted to his flip-flopping, yeah, all the way until today. And therefore, the Nasdaq after this down, right, it closed above, jump higher, and the point number 2 is, as of end of last week, it is still above. Therefore, it's green color. All right. So this is the step 1 and step 2. Very quickly, what is step 3? Step 3 is go back to Dow theory. Now, if the market is on the uptrend, yeah, it will be doing higher high, higher low, higher low, right? When this happened, yeah, I know that the trailing should be at this point. So I would put the name, if let's say I'm watching Simsky, I will put the name here where the trading level is. So if the name is below where the market is, it is supporting from the bottom. Yeah, it's at the support trailing level. If the market were to continue to take higher, I will adjust the trailing up to this level, and my name will go up to this level, is still below the market. In other words, where my name is below, that means the market is up, supporting from below, right? If the market continue to go up, it will continue to trail higher, still below the market. But when the market start to break, right, it start to break, and now it's doing lower low already, then this trailing would be from the top, and my name will be at the top. So in other words, if on the up market, you should see my name from the bottom trailing up. On a down market, you will see the name on top pressing it down. I think this is simple enough. If you understand this, can you type a 3 in the comment for me? All right. So this will be the third step. Yeah. The third step, as you can see that the name, right? Of course, it is going up. Yeah. Higher high, higher low, higher low. Until this point, obviously, it broke the previous low. Correct. At this point, after breaking already, by right, it is actually downside. But this turnaround go all the way and break this high. So Simsky is now doing higher high, and the trading level has not been adjusted yet, so it's over here. So you can see that my name for this chart is Simsky, and it is placed at this trading level. So unless the market can straight away come down and violate this, otherwise Dow theory, this is still up, yeah, until I find a higher low, then I will adjust this higher. But as long as the name is below, it is supporting the market. If my name is on top, then it will be pressing the market down on the downtrend. So this is the point number 3. Now, same thing, we look at the Nasdaq, so 0.1, 0.2, 0.3 or so, right? After going up higher high, higher low, here the market start to break and do a lower low, do a lower high, right? So it has been down. But after that, it swing around and take on this high. So the Nasdaq is now also, the name is below, trailing from this level and doing higher high, higher low for this period. So it is trailing from below, which is up. Okay, now, so I chose to show you two markets. Number one, our own market, the Simsky, as well as the Nasdaq, which is the market that most of the speculators would want to put their money in, because this is a market that will have a lot more upside potential, because it is a technology revolution, because of this AI war and so on and so forth, right? So if there's easy money where they can borrow, they will want to speculate on this. So therefore, this is one of the main market that I will be watching as long as we continue to have this tech revolution, unless it is over. Now, so what do? I would basically follow greater food theory, Dow theory, all right, and to see funds allocation, because not all the market will be going up together, not all the market will be going down together. At some point in time, the funds will have no more monies left, so they have to decide which market is worth for me to put in the money and which market I do not want, and they would sell those market that do not want and transfer the money into where they find has got more potential to go up. And that is what I mean by funds transfer or funds allocation. So every weekend I will look at these 10 markets. All right, let me just quickly tell you what they are. On the left side, these are the three US market: the Dow Jones, the Nasdaq, and the S&P. These are indices. And I will use one of the European market, the German DAX, right, to represent the German market. Yeah. Now, so these four are Western market, and this center four are our Asia market that you can trade the futures with the SGX. SGX provide these futures. Now, and these four markets are not indices; they are the actual futures prices. So this is the China A50, this is the Taiwan, this is the Simsky, and this is the Nikkei. All right, so this would represent our Asia, and the right two would be our Southeast Asia neighbor. I would use the Thailand as well as the KL. So basically, following step 1, 2, 3, right? Now, I know I have friends who say that to me, hey, it's a little bit difficult to squeeze in to identify the last two candles or whatever. So I do one thing for you, huh? I color the frame in this color, which means that if that market is doing higher high, higher low, I will do a green frame. Low high, low low, I'll do a red frame, right? If it is inside, it's a blue frame, and engulfing, it will be a purple frame. So at the end of last weekend, which is 2 days ago, this is the outcome of the 10 markets, right? As you can see here, after the Trump tariff in the beginning of April, right? The market has been recovering for about 8 weeks already. 8 weeks, now, so until these 8 weeks, actually, four markets, right? Just about 2 or 3 weeks ago, they start to show more weakness than the other six. Which are the four? Very obvious, the four that you can see are in red border. That means, right, Thailand is one of them. Yeah, about 4 weeks ago, it formed a high, and it start to, until end of last week, do week to week lower high, lower low. KL as well, China as well, and the Taiwan as well. So these are the four markets that somehow about 2, 3 weeks ago, the money start to stop pumping into them. But the money continue to pump into the other six markets, that they are still in a way on this uptrend, still trailing well, all right? So this is the outcome of my market analysis following step 1, 2, 3. Of course, yeah, over the weekend when I do this, I would list down to you out of the 10, right? 3 markets doing higher high, higher low, 4 doing lower high, lower low, 1 doing inside, and 2 doing engulfing. Yeah. Now, depending on which market you are trading, you have to know whether your market, the money is still preferred to come in, therefore you should be doing long focus, or is the market actually selling, are the funds dumping your market, so that you should be a bit more bearish bias. All right, so this is how I look at the broader picture, the general trend, and then zoom into the market which I choose to trade to have my direction bias. Yeah, of course, the second point is you see how many markets are above the emo lines, how many inside, and how many are below. So generally, you will be able to therefore have the assessment of the overall sentiment, whether it's bullish or bearish. Now, let me give you a small little clue. Before the Trump tariff plunge, very few market are left above. Many have already gone inside and below. All right, that's already the indication. So no one should be caught by surprise with Trump's action before that shocking announcement of the tariff war. Right. Of course, finally you see the names. All the names are below except for Taiwan is on top. This is over the weekend. Just about yesterday or today, the Taiwan managed to pierce higher so that it has flipped a lower high into a higher high. So Taiwan's word also go into the bottom, and for Dow theory, I have all the 10 markets supporting from the bottom. Okay, so that is what happened, right? As I mentioned, I want to let the market tell me what is happening based on all the good news, bad news, that the market is still actually with good news taking new high, all right? With bad news, only retracement for you to buy. That is the situation as of today, as of now, all right? So, okay, with that, to follow up, what is my follow up? As I mentioned in this Facebook, if you have managed to find it, just like or follow. I will post this over the weekend, depending on whether I'm available or not, whether how soon can I post, whether on Saturday and Sunday. Just this 3-step SOP. Hopefully, it is you are able to therefore follow this and learn how to look at the market and like at least become a decent analyst. All right. Okay. So I promise to do this for you for 2 months, but I will be out of town in a couple of days' time. So for the next 2 weekends, I will not be able to do. So if you go into this Facebook, right, you will be able to see my posting over last weekend plus over the last 2 months. Yeah, if you wish to follow, you can just look at the posting there. But I will not be able to post for coming weekend and next weekend, and I will continue only after that. And I will do 2 months for you. All right, 2 months for you, free. Okay, so with that, let's quickly do a summary here of what I've done for you today. Now, first of all, I always use this analogy here. If you wish to make music and you enjoy making music, you need two important things. You need to understand music theory and you need to have good instrument where you can play, right? Do you agree with this? If you understand this model, type a one for me, Now, I'm using this model to explain to people if you wish to make money in the financial market, you also need these two. Basically, you need to have an understanding of how the market behaves, is like theory, understanding theory, all right? And then you also need a good instrument, because only theory, no instrument, you cannot produce sound, yeah? But if you have instrument and you're not good in theory, then you don't make music, you make noise. So same thing in the financial market, right? You need a good instrument whereby you understand how you can play around this instrument and how the market behaves. Yeah, combining this, you'll be able to make money. All right. Okay. I can I saw two questions. I addressed that two questions first. Explain step three. Sorry, I don't think I have the time. Now, in my trading wisdom Facebook, right? There is one particular weekend whereby I explain the step three. So you can go to the Facebook and look for one of the video whereby I explain the step three again. Okay, thank you. Don't mind. Share the Facebook link in the chat. I'm not sure I have that link. You give me a moment. Later, I see whether I can find the link for you and I share in the chat. All right. Okay. So meanwhile, let me continue with this. Okay. So if you understand this, basically different people use different instruments. Most people trade stock and shares. Some people trade ETFs, but I do futures. As I mentioned, if you're not familiar with futures, then you need to at least learn about it, You cannot straight away go and jump into doing the A50 futures, DK futures, or whatever. So therefore, but whatever instrument that you know, right, you are able to therefore apply the market theory and benefit from catching the moves, that is provided by the market in this numbers game. Right. So what I've done for you so far, basically trading index futures with TA. All right. I already explained the difference between investing in stocks using fundamental and I trade index futures using TA. And to understand market structure, I explained using the immobilized model, incorporating psychology into the whole thing to make you understand your own psychology as well as the market psychology. And euphoria, too late to buy, panic, too late to sell. I also have given you the reversal gap concept so that when too late to buy, you know when you can start to attempt selling, and when too late to sell, when you can start to attempt buying. All right. So And the greater foods theory, Dow theory, and knowing how the funds transfer allocation, I have given you my steps 1, 2, 3 SOP of how I listen to the market every weekend. At least you know whether the market is actually still bullish or bearish, and incorporating the immortalized SOP, you basically would know what to do. All right. And then how I blend FA with TA, yeah, to trade what you see but not what you think. All right. And with that, okay, I do have training programs, yeah, which for those of you who are interested, you can email me. You can email and take a screenshot of this to find out what programs I have, because I don't want to talk about this now in case people think I'm hard selling anything. So I do have funded courses which are do for SGX. So if you want to know more about it, if I have that program, I can reply you. Yeah, if you email me to share with me your interest of finding out about my course, lah. Okay, so all right, I just give you a bit more time for those who are keen to take a snapshot of my email.
Hey
Okay,
Tom,
so with
your
that,
email. Sorry, can you show your email again? I think it's slightly obscured on my screen. Okay, the stop
oh,
sharing. Just hide it so the audience can take a close look. Yeah,
I put it up here.
yeah, yeah. Thanks, Tom.
Better? Okay, thank you,
Yeah.
thank you. Uh, all right. I think, yeah, with that, I've come to the end of the session already. I think, okay, at least my timing is not too bad. I did not overrun one hour by a lot. It's already 8:15. So okay. I think all right. While okay, now I can start to take some question. You may type your question into the question box. Meanwhile, let me see.
Hey Tom, I also found the link to the page for Training Wisdom. I sent it to you on WhatsApp. You just help me confirm if it's the right page and then I can share it on the chat.
Oh, okay. Let me see. You're right. You're right. Well done. Okay, Sri has found the page, so he'll be sharing it. Hey, hold on. Where is mine? Hmm. Hey, am I still here? Okay. Sorry.
Yeah,
I
yeah,
lost the.
you're still here. Well,
Yeah, yeah.
you just lost your slides momentarily. Yeah, okay.
I lost the
Tom, I
page.
think we have some questions.
Yeah, yeah. Okay, so let me see. For exponential moving average, is it uh wait I can't. Is it at close price? Yes. The moving average using closing price. Okay, that would be a simple question to answer. May I know how do you identify swing high, swing low? Is it a three candles pattern? I don't know what's the three candles pattern, but I do use a certain formula, right? Correct. That means I have a high form that is not taken for three subsequent candle. That would be a swing high. If the market form a low for the next three candles that the low cannot be taken, then I'll take it as a swing low. All right. Simple. I think when you ask the question and answer it this way, I think you get me. Yeah. For Jim, is it? All right. What tools have the capacity of 16 EMA? Um, I think trading view. Trading view offer free charting, but you got to play around. I think they have an indicator called moving average, what cluster or whatever. You got to play around. I can't remember the name of it. That means a free charting will let you only draw like limited to two indicator or three indicator. So there's one of the indicator itself, you can plug in a few moving average with one indicator, right? So look for the indicator that can plug in a few, so you're able to use two or three to get the immobilized effect. If you really cannot, then you just get the fastest, the slowest, and you modify those in between. Can immobilize be used in other asset classes like gold? All right. The answer is 101. Answer is yes. Yeah, is yes. But otherwise, for different asset classes, you need to understand a bit more on the fundamentals that drive those asset classes. Okay. I always find stock index the most easy to trade because you have most men on the street doing that. So therefore, the emotions of greed and fear is very much manifested in stock indices. Yeah, other asset classes still can, but you need to modify a little bit, understanding the supply and demand behind those asset classes. Um, wow, it's coming in a bit too fast already. How to do day trading using your strategy? Wow, this kind of question I can't answer you like that. I am giving you a broader picture so you can see the bigger picture. But day trading, right? Very often, it is sentiment driven during the day, right? A trend can be up, but suddenly that day some bad news, so that day can open and trade down and close low. But that could mean a good opportunity for you to buy at the lower level for a bigger picture. But intraday itself, you will lose money if you long. So I can only answer you that way. Yeah. So if you are experienced enough in day trading, you basically should know what I mean lah. All right. So I have my big picture to guide me with the general direction. But you know that if market is too bullish already, I want to be careful. Day trading still trying to long. However, if there is a decent retracement, all right, down to a low enough support level, then I will want to resume focusing on long in my day trading. Okay, so I think that is about the best way I can address this question. Thank you. Very good webinar. Oh, you're welcome. Can you show the parameter of the emo lines again? Let me quickly go back to the emo lines. I think is here. All right. And then is there a reason why 6 is black or white? Okay, black slash white is because some people have a white background, so therefore my 6 is black lah. So some people the charting they use a black background, so therefore you need a white, yeah, to stand up, right? It's just to contrast the background. Okay. In trading view for exponential moving average, there is a smoothing as 14, and in trading view for EMA, there is smoothing as 14. Do we have to use smoothing in EMA? You don't have to. You don't have to. Nothing special. Just use the normal EMA. Normal will do. Mm. In your opinion, do you think that technical analysis raises a substantial amount of uncertainty? Technical analysis raises a substantial amount of uncertainty. For example, a company is getting net losses consecutively without proper fundamental analysis, and by looking at chart patterns, wouldn't that introduce a huge risk? Now, I do not want to go into argument because I know as I was a newbie learning about TA, there are people who like both and they blend both. All right. There are people who like only FA and they don't want TA. There are people who like only TA and they do not want FA. So there are different combinations. And there is one more group. There's this group that like FA and condemn TA. All right, and vice versa. So, okay, I'm saying this is because to me, maybe instead of answer your question directly, I think I would rather answer your question indirectly. Indirectly. Now, I remember reading this book called The Disciplined Trader by Mark Douglas. All right, by Mark Douglas. He said that the market is a totally unstructured place. Yeah, it's totally random. There's no order. Now, think about it. How can anyone make money from a unstructured, random, and no order environment? Correct. So therefore, Mark Douglas say that traders our job is to create order within this unstructured environment, so that we can have order to guide our action. So we created an order not to know what the market is doing, but we know that okay, once we have created this order, right? We will know what to do. When there's something for us to do, we do. When there's nothing for us to do, we do not do. Okay, and then so I do not know if you all understand what I mean. So therefore, TA ultimately, right, is to for you to learn and create a set of order to guide your action. And you know that once you get a good set of order that suits you, you will have the probability in your favor over the long run. And that's how we make money as a technical trader. All right. And then there's one more thing to answer your question. I remember long time ago, I know someone who graduates with a first class honors in econs or whatever. Yeah. But he immediately realized that his academic knowledge cannot transform into any money at all until he learned technical analysis. And he shared with people this. He said that the big boys can hide from you what they know, but they cannot hide from you what they do, because what they do will be reflected in the chart. And if you're good enough to pick up the clues, right, the footprints left behind by the bulls and bears, you would be able to therefore know the action. Yeah. So okay, I hope you're okay with the answer, lah. Huh? Otherwise, if you really prefer fundamental and it serves you well, then go ahead, right? Okay, I go on to the next question. Why is the sixth dotted instead of solid line? It's dotted. Okay, lor, then it's dotted. Lor. That doesn't matter. The dotted or whatever is not that important. Yeah, it's just for me to see my to see my opening and squeezing effect. Lah. That is the main purpose. What time frame is best for your emo lines? For analysis purposes, use it for daily as well as weekly. Okay, I do not exactly use it for intraday, although I do, but intraday it will flip too fast. It doesn't give a very a more firm and sustainable trend analysis if I do intraday. Yeah, so daily and weekly. Okay. All right. I think basically, yeah, I've done with all the question. I hope I didn't miss any. I apologize if I missed any. All right. So I love tea driving. Okay, can. All right. So yeah, I hope you guys enjoyed today's session and at least take home something. So there will be follow up. So don't waste tonight's session and don't waste my effort for posting my weekly session from 2 weeks later. So I hope you guys will continue to benefit from my Facebook posting. And I think with that, that's all for today's session. Thank you for attending. Thank you for your time, especially to my overseas audience, if there are any. Yeah, organizer.
All right, thank you so much, Tom, for the valuable insights. Rest assured, the this session will be recorded, so if you need to catch up on the insight shared, you can. And if you have any questions post webinar, you can also send them in the survey form at the end of the webinar. We will send a follow-up email with the details of basically we'll provide a link to this video recording so you can catch up on the insight shared. Thank you so much for being a wonderful and very participative audience, I might add. And see you in the next webinar. Have a great day ahead.